While you were at a barbecue, yes, I said it, Trump signed a tax bill that just changed everything.
But this is the capper because this is, again, the biggest tax cut, biggest reform of all time.
And I'm not talking about small tweaks. I'm talking about the biggest tax overhaul in years. One that either saved you tens of thousands of dollars or it will cost you almost everything if you miss deadlines. And listen, and there are two dates that you need to know about. That's September 30th and December 31st, 2025. Now, this video is coming out late. We've already missed the September 30th deadline. But if you've missed one of these, you are leaving money on the table. So by the end of this video, you would know exactly what changed, how it will affect you, and what you need to do right now. So here's what we're covering. First, the 3 brand new deductions that just became available. That's tips, overtime, and car loan interest. Second, the business owner strategies that could save you 6 figures this year alone. And third, the deadlines, if you miss it, you may owe thousands. I wouldn't be your EA if I didn't tell you that there is one provision buried in this bill that absolutely no one is really talking about. And if you're over 65, this could make your Social Security completely tax-free. I'll show you how in a few minutes. But I am Sabrina Michelle, enrolled agent, CFO, tax strategist, and accountant for over 13 years. I have seen every tax mistake possible. And now I help high-achieving women entrepreneurs turn their business success into generational wealth. I spent weeks looking through the 946-page Big Beautiful Bill to see what tax changes were coming either this year or next year. And this is what I found. It's a game changer.
I'm calling for no tax on tips, no tax on overtime, and no tax on Social Security benefits for our great seniors.
If you want weekly breakdowns like this that actually help you save money, hit the subscribe button. I drop videos every week with strategy that helps you keep more money in your pockets. Okay, let's go. The foundation, tax rates and standard deductions. Let's start with what just became permanent because it's actually more than you think. Back in 2017, Trump passed the Tax Cuts and the Job Act. And because of this, tax rates dropped in almost every tax bracket, okay? The standard deductions almost doubled.
After years and years of wage stagnation, we are finally seeing rising wages.
And everyone thought, perfect, I have more money in my pocket, right? But here's what they didn't tell you. All of those tax cuts were set to expire December 31st, 2025. This meant in 2026, your taxes were about to go up significantly. If your tax bracket was 22%, it's going up to 25%. If your tax bracket was 24%, it's going back to 28%. Your standard deduction, cut in half. I had some clients calling me saying, hey, should I do a Roth IRA conversion now before the rates go up, accelerate my income into 2025? Like, what should I do? And quite frankly, I did not have a good answer at the time because we did not know what Congress was going to do. But then something happened July 4th, and that changed everything.
There could be no better birthday present for America than the phenomenal victory we achieved just hours ago when Congress passed the One Big Beautiful Bill to make America great again.
Trump signed the One Big Beautiful Bill into law. And those tax cuts, they are permanent now. Permanent. So the tax bracket for 22%, it stays at 22%. Same thing for 24% and 37%. There's no more expiration date, no more uncertainty. These rates are permanently locked in. But that's not all. So the standard deductions, they just went up. For 2025, if you're single, your standard deduction is $15,750. And if you are married, it is $31,500. Now, if you've been filing for a while, you know that seniors 65 and older, they already get a extra deduction. And that's $2,000 for single seniors and $3,200 for married couples. But the Big Beautiful Bill just added something massive. For 2025 through 2028, seniors get an additional $6,000 deduction if they're single or $12,000 deduction if they're married filing jointly. So let's do the math. If you are married and over 65, your total standard deduction for 2025 is $46,700. This means you earn up to $46,700 and pay zero in federal income taxes. For a lot of retirees, this makes their Social Security tax-free. Now, I know all of that sounds good, but there is a catch. The extra senior deduction, it starts to phase out if you're making over $75,000 for seniors and $150,000 for married couples. So if you are a higher earner, you might not get this full benefit, but for most retirees, this is a game changer for them. Okay, so what have we learned? The tax rates are permanent, standard deductions are higher, and seniors, y'all get a massive win. But now we need to talk about the 3 brand new deductions that just became available. And if you work in a certain industry, this is about to change your life. So this is the foundation. Tax rates aren't going anywhere. Your standard deduction just went up. And if you're 65 and older, you have a huge win. But now let's talk about the new money, because these 3 deductions, no one saw coming. Section 2, the new deductions: tips, overtime, and car loan interest. All right, here is where things get a little wild. The big beautiful bill just created 3 new deductions that have never existed before. And if you work in the restaurant industry, rideshare, salons, delivery, or any other place where you will get tips, or if you work overtime, you need to pay attention, because what I'm about to tell you could save you thousands of dollars on your 2025 tax return. And yes, I have already had clients reach out to me and ask, does this apply to me and how can I track this? And the answer was yes, if you qualify. So here's the first one, and this one is already causing some confusion. So let me clear it up right now. No tax on tips. If you receive tips, you can now deduct up to $25,000 of qualified tips from your taxable income. Let me say that again. $25,000 in tips are now tax-free. And yes, this applies to your 2025 tax return in April of 2026. So when you file in 2026, you'll be able to take this deduction. Okay, I'm gonna give you a scenario. So let's say you are a server and you earned $40,000 in tips this year. You can deduct $25,000 of that, which means you're only paying taxes on $15,000. And if you're in the 22% tax bracket, that is $5,500 in tax savings. And yes, that is real money, but there are some rules. First, there are income limits. So if you earn $150,000 and you're single, or if you earn over $300,000 as a married filing jointly, this deduction starts to phase out. Second, the IRS is still working on some guidance and policy that will identify and define what qualified tips are. So that is still something that we are waiting on. And as soon as that news hit, check back on this channel so that I can break it down for you. But here's what we know. If you are a server, a bartender, a hairstylist, rideshare driver, a delivery driver, and you receive tips, you need to make sure your employer is tracking it correctly, because when the tax season comes, you are going to want that on your W-2. Okay, second deduction, no tax on overtime. If you work overtime, you can deduct up to $12,500 if you're single, and up to $25,000 if you are married and filing jointly. And let me tell you something, my best friend, she gets overtime, okay? She loves her overtime. This is a win-win for her. The same limits as tips apply here. If you are single and you make over $150,000, you tend to phase out of this deduction. And the same thing for married filing jointly. If you make over $300,000, then you phase out of this deduction. But the good news is that it is effective for your 2025 tax return. So, like I said before, if you are working overtime, please make sure that your employer is tracking and separating regular pay from overtime pay. You want it to reflect on your W-2, because that distinction, it really does matter. So before, everything was just in the pot of wages. Now you have to separate them, wages versus overtime. All right. And last but not least, the third deduction. And this one is getting a lot of attention. The car loan interest deduction. You can deduct up to $10,000 of interest on your car loan, but there is a special requirement. The car has to be brand new and it has to have final assemble in the United States. And you can only claim one car per tax year. This applies for cars purchased between January 1st of 2025 through December 31st of 2028. And again, there are income limits. So it starts to phase out for singles that make over $100,000 and married filing jointly that make over $200,000. So if you're thinking about buying a new car, please do your research. Make sure it qualifies, make sure you're within the time frame window, and make sure you are buying a car that has been final assembly has been done in the United States. Because if you don't, you are leaving money on the table. Those are the 3 deductions: tips, overtime, and car loan interest. If you qualify, you will save thousands. So just to recap the individual changes of the big beautiful bill. So it's a permanent tax rate. Standard deductions are higher. And then you have the 3 brand new tax deductions. But if you're a business owner, this next section is where you can make some real money, because I am going to show you that you could save 6 figures this year alone. Okay, so that is what changed for individuals. And honestly, these changes are great. But for business owners, you just got handed the keys to the kingdom. Let me show you what I mean. All right, business owners, I am talking to you because the big beautiful bill just gave you some powerful tax saving tools we haven't seen in years. And if you're not taking them, you are literally giving money to the IRS. Here's the thing, I see it all the time in my business. Most business owners are overpaying taxes because they don't know what's available. They think, you know what, I'm just gonna write off my expenses and I'm gonna hope for the best. But the wealthy, they have CPAs and accountants that specialize in tax strategy, and their CFOs are finding every loophole, every deduction, and every credit for them to take advantage of. And now you have access to that same strategy. So let me show you. 100% vehicle deduction. If you use a vehicle for business purposes, you can write off 100% of that cost in the year you purchased it. Not over 5 years, not depreciation, 100% in the year you purchased. But there are rules. First, the vehicle has to weigh more than 6,000 pounds. Think an SUV, a truck, or a larger vehicle. Second, you have to use the vehicle more than 50% of the time for your business. And third, you have to have purchased it after January 19th, 2025. If you bought an $80,000 SUV and you use it 100% of the time for your business, you can write off $80,000 on your 2025 business tax return. And if you are in the 37% tax bracket, that is $29,600 in tax savings. Now that's some real money that you can invest back into your business, or you can put into your savings account, your trust, your retirement account. Okay, this one is permanent. Enhanced qualified business income deduction. If you're a business owner or an independent contractor, you can deduct 20% of your qualified business income. So if you earn $100,000 in business income, you can deduct $20,000. If you earn $400,000, you can deduct $80,000. But the big beautiful bill just made this permanent and increased the income phase out limits. So for certain businesses like doctors, lawyers, accountant, the phase out used to start pretty low, but now it has increased to $75,000 if you are single and $150,000 if you are married filing jointly. This is huge for service-based businesses like me. All right, this next one is for business owners who are investing in growth. That is 100% research and development expensing. If your business invests in research and development, say for instance that you all develop new products or you improve processes, you're creating software, you can now deduct 100% of all of those expenses in the year in which you incurred them. And on top of that, you can also claim the research and development tax credit, which is up to 20% of those same expenses. So you are getting 2 tax benefits on the same expense. Let's say you spend $100,000 on research and development. You can deduct $100,000, which will save you $37,000 in taxes if you're in the 37% tax bracket. Then you can claim the $20,000 R&D credit, and that credit will save you $57,000 on your $100,000 investment. This, my friends, is how you scale your business without getting crushed by taxes. See, vehicle write-offs, qualified business expenses, and research and development expensing. These aren't loopholes. These are legal strategies written in tax code. Okay, those are the big 3 for business owners. But there's one more strategy that no one is really talking about. And if you have a family member, this could save you tens of thousands of dollars. I'll show you in just a second. What I'm about to show you next is a strategy that high net worth families have been doing for decades. And now with a higher standard deduction, it is even more powerful. Let's get going. All right, this is the strategy that separates the amateurs from the pros. It is called income shifting. Here's how it works. With a higher standard deduction, you can now hire family members and pay them $15,750 as a single person or $31,500 as a married couple. And they won't owe income tax because the standard deduction wipes it out. But you as business owner, you can deduct that expense. So you are shifting income from your higher tax bracket to their 0 tax bracket. I'll give you an example. So let's say I am in the 37% tax bracket and I pay my niece $20,000 to help me with social media, some light bookkeeping, and admin work. I can deduct that $20,000, which will save me $7,400 in taxes. My niece uses the standard deduction to wipe out the first $15,750. She's only paying $4,250. At a 10% tax bracket, that's $425 in taxes. The net savings, $6,975. And guess what? The money stays in the family. Now, there are rules. The family member has to actually work in the business, and you have to pay them a reasonable wage for the work that they're doing. But if done correctly, this is one of the most powerful tax strategies available. Okay, and one more. This is for high earners expecting a big capital gain, and that's opportunity zones. If you are selling a business, real estate, stocks, crypto, and you're expecting a large capital gain, you can defer and potentially eliminate that gain by investing in qualified opportunity zones. Here's how it works. You roll your capital gain into an opportunity zone fund. That gain is deferred for 5 years. And if you hold that investment for at least 10 years, that capital gain goes to 0. This is so powerful for high earners. The new rule starts in 2027, but you can start planning now. So those are your business tax strategies: vehicle write-offs, QBI deductions, R&D expensing, income shifting, and opportunity zones. But now we need to talk about the deadlines, because if you miss them, you are leaving thousands of dollars on the table. All right, this is where people start to mess up, because they hear about these tax strategies, they get so excited, but they do nothing. And by the time they remember, it's too late. So let me make the deadlines very clear. And I know we just passed this last one, but I'm still gonna give you the information. September 30th, 2025. If you are thinking about buying an electric vehicle or a hybrid, you have until September 30th, 2025 to finalize that purchase. The credit is up to $7,500 for a new EV or $4,000 for a previously owned EV. After September 30th, that credit goes away. So you're in luck if you purchased a EV before September 30th. Now, moving on to December 31st, 2025. If you've been thinking about installing solar panels, you have until December 31st, 2025 to have that system installed and producing energy. This credit is 30% of the total cost. So say for instance, you spend $80,000 on solar panels, you get a $24,000 credit on your tax return. But the deadline is December 31st and installment takes some time. So if you are serious about this, you need to start now. Here's the thing. These are big ticket items: solar panels, EVs, new cars. These are all expensive, and the tax credits are designed to offset some of that cost. But if you miss the deadline, you are leaving thousands of dollars on the table. So if you've been on the fence, now is the time for you to move forward. Let's recap. For individuals, tax rates are now permanent, standard deductions are higher, and seniors, y'all get a massive bonus. Then there are 3 new deductions: tips, overtime, and car loan interest. And for my business owners, you have vehicle write-offs, QBI deductions, R&D expensing, income shifting, and opportunity zoning. And then there are 2 critical deadlines: September 30th and December 31st. If you implement these strategies, you could be saving thousands, maybe even tens of thousands on your 2025 tax return. No more overpaying the IRS and no more leaving money on the table. Instead, you are keeping more of what you earned, and you are building wealth with intention. All right, the key is tax codes reward actions. The people who win are the people who move fast and execute. If this video saved you some money, hit the like button. It will help more people find this type of content. And subscribe, because every week I am breaking down strategies like this to help you build wealth, minimize your taxes, and create financial freedom. Drop a comment and let me know if you're going to take advantage of these provisions. Let me know, are you buying a car? Did you buy a car? Are you installing solar panels? I want to hear from you. Now, I'm gonna be honest, the big beautiful bill is massive. There is a lot that we did not cover today. So if you want me to do a deeper dive in, say, opportunity zoning, R&D credits, or the SALT deduction changes, let me know in the comments and I'll make it one of my next videos. Thank you for watching. I'm Sabrina Michelle, and always remember, master your money, build your legacy, and lead with intention. All right, see you next time. Bye.